Cryptocurrencies have had a great first quarter this year, recovering much of the losses they'd incurred over the second half of 2022. The price of Bitcoin currently stands at 28,000 US dollars, a steep rise from its price at the start of this year at just 16,500. That's almost a 70% gain in just 3 months. There is certainly a lot to be said about investing in cryptocurrencies. However, we're not here to offer you advice about investing in cryptocurrencies. Instead, we'd like to explain why investing in gold might just be the perfect way to hedge against the risks of your crypto investments. Because while the returns of crypto might be high, it's definitely quite risky. If you're one of the 20% of Americans who own cryptocurrencies, you were probably in for a wild ride last year, as you saw the value of your investments and hard-earned money plummet. Over the course of 2022, the price of everyone's favorite digital currency, Bitcoin, fell from around 46,000 to just 16,500 US dollars. That was surely a tough pill to swallow for investors. It feels important to mention that Bitcoin and gold actually share a lot of common ground, and therefore might attract the same or at least similar types of investors. Both gold and Bitcoin are scarce and finite. In a recent video, we told you how there were only 0.77 ounces of gold in the world for each person. That's 24 grams. Well, similar to gold, Bitcoin also has a limited supply, as only 21 million can ever be minted, or maybe I should say mined. Both assets are also decentralized and immune from the manipulation of central banks and governments looking to put a band-aid on their economic troubles, potentially rendering both assets as a crucial hedge against inflation and the ever-increasing money supply. This may explain why some people have started promoting Bitcoin as the new digital gold. However, this is essentially where the similarities between gold and Bitcoin end. For starters, the demand for gold is much more diversified. Unlike Bitcoin, which until now only really serves as a speculative investment, gold is a consumer good, as it is used in jewelry, industry, and many electronic devices that you probably own. It's also held by the central banks of governments and large reserves, something that doesn't really appear to be changing anytime soon. In fact, gold buying by central banks reached its highest levels in 2022, with China, India, Russia, Turkey, and Qatar amongst the most notable buyers. With such heavy interest from governments, we can be confident that gold isn't going away. On the other hand, it's unclear yet whether Bitcoin's supremacy is destined to continue, as a new cryptocurrency may emerge anytime to supplant Bitcoin. Bitcoin Cash, for example, boasts many of the same characteristics as Bitcoin, but also offers faster and cheaper transactions. It's also worth noting that Bitcoin and gold markets operate at very different scales. While Bitcoin's daily trading volume usually lies between 2 and 4 billion US dollars, the daily traded volume of gold regularly exceeds 180 billion US dollars. The diversified demand and interest for gold and larger trading volumes, along with gold's long and remarkable history as an investment asset, make it a significantly less volatile asset than Bitcoin. Investing in gold can help hedge against the volatility of your crypto investments. To put that into context, when looking at the volatility of gold and Bitcoin over the last 2 years, we find that Bitcoin managed to lose 2.5% or more of its value at least once every 4 weeks. Gold, on the other hand, lost 2.5% or more of its value just once every 13 weeks. Some of the worst advice that someone can give you is that cryptocurrencies like Bitcoin can replace gold in an investment portfolio. That's just not true. Whatever your thoughts on either asset are, nearly all the data suggests that gold and Bitcoin are inherently different assets, meaning you should absolutely not replace one with the other. Bitcoin's price behavior closely resembles a high-risk, high-growth tech company stock. That's not us saying this, but analysts at the investment bank Goldman Sachs. The price of gold, on the other hand, tends to increase when the price of tech stocks falls. It shouldn't be surprising then that the correlation between the price of gold and Bitcoin is poor or modest at best. The two assets just don't seem to agree with one another. Another area where gold and Bitcoin are different is in how they are distributed around the world. Gold is more or less evenly distributed. No single continent accounts for more than 25% of total gold production. And the top five gold producers are China, Russia, Australia, the United States, and Canada. Meanwhile, Bitcoin, well, sadly, that's a whole other story. Reports by Bloomberg suggest that around 50% of all Bitcoin mining takes place in China, concentrating the blockchain power in just one single country. Perhaps more alarmingly, around 93% of all the Bitcoin out there is owned by just 2.5% of wallet addresses. We're not going to try and sugarcoat this, that's just simply outrageous. Think about it for a minute. Remember that one investor can own multiple different wallets, meaning that 93% of all the Bitcoin out there is at most owned by 2.5% of investors. However, we want to make it clear that we don't think you have to choose. You can still invest in all your favorite cryptocurrency projects. That said, it would also be wise to hedge these investments with gold. You know the old saying, don't you? Never put all your eggs in one basket? After all, I'm not sure if you've noticed, but eggs are kind of expensive these days. Now that you know how important it is to hedge the risks associated with your crypto investments, you might be wanting to learn about the different kinds of gold investments. If so, you should subscribe to the channel and press the bell icon because we have a video coming up next week on that very topic just for you. Purchasing gold, physical gold, carries significant drawbacks. These include the costs of purchase, storage, and insurance. Furthermore, the associated transaction costs are often very high. For this reason, it might be worth considering investing in a gold ETF. GLDB ETF, ticker GLDB, is an ETF that's 100% fully exposed to gold, tracking the Solactive Gold-Backed Index, which consists of a portfolio of investment-grade corporate bonds fully hedged to the price of gold. In addition to protecting your purchasing power against inflation, the GLDB ETF pays out a monthly 3% annual dividend yield.